like my approach personally is to look at, and I think it's very relative to fundamental analysis, just patience and whatever, but like looking at a systematic trading strategy across 10 years, 15 years, 20 years, and saying, okay, does this strategy generally play out over 15, 20 years? Not that it's going to play out the exact same way, but like, are the conditions, the requirements, the markets still generally the same such that this strategy should play out moving forward? And if it does, I don't want to go through the day-to-day operations of having to reconfirm that to myself every time I make a trade. I just want a bot to do that for me so I can look for other strategies that I can start trading as well.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you. I'm putting it here on the podcast because I really believe that this is going to provide you massive, massive value. And that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, I have a special guest online, Kirk du Plessis. Kirk and I actually go back a few years, and this is the second time that I've had him on the show. And we're going to be talking about kind of the new age of trading. And Kirk, thanks for coming on, man.
Yeah, thanks for having me back. I appreciate it. Good to see you again.
Yeah, absolutely. It's been well, by the time people listen to this, it's going to have changed a lot, but there's been a lot of volatility coming through in the markets right now. And who knows how long that's going to last, but there's something interesting that you guys have been working on, which I'm really into. I think it's going to be the wave of the future. Tell us more about the bots. I see it on your shirt there, so I know it's on top of your mind. Tell us about the bots there.
Every day. Well, first of all, I have like 10 of these shirts. So I just like keep wearing them like constantly over and over again. So everyone sees me and they're like, do you have the same shirt? No, it's like 10 different shirts that I have.
Listen, here's a trick that I learned from Shark Tank. I wear the exact same jacket and shirt every time I do a podcast because you can actually take clips and put it into whatever episode and nobody knows the difference, right? So yeah, I brilliant. I should wash mine more often.
Exactly. So we built out an auto trading platform. I think I talked about it actually the last time I was on the show, and we're going to be rolling it out. We've started rolling it out. We've got a bunch of beta users in there that are using it and starting to build bots. They're going crazy building bots and automations and sharing templates. The idea that we had a number of years ago was this concept around just automating what we do in trading. And so I think the struggle for sure has been that I think the people have been used to the idea of having an automated system and looking for something that, is like totally wrapped up in a box and performs perfectly or whatever, right? And what we've had to try to teach people is that what we want our auto trading platform to do is just replace what you do manually right now. This could be end-to-end automation, and it definitely can do that. It also could be components of what you do in trading, right? Like if you want to just find all the trades, but you want a bot to manage all the positions once you get into it, it can do that as well. So we built out a complete auto trading platform that requires absolutely no code. We gave everyone the ability to add decisions and actions to their bots, create cloning. And I think one of the most crazy things, and already in the community with people sharing ideas, is the ability to wrap up your bot or your template or your automation and share it into the community in a message. You can share it in a private message, group message, public post if you want to. I think this is going to be the wave of the future for sure, because the ability to receive templates from somebody and then tweak them to your specifications and then let them run instantly is just mind-blowing that nobody has done it before. But so that's where we're at.
I love that idea of being able to share the templates. That's really, really cool. So does it do any kind of back testing ahead of time, or is it just like you need to have your strategy all set up and then click the buttons to make it run?
Yeah, so there's a couple things that we built inside the platform. So we did build our own backtester.
Mm-hmm.
Backtester is historical looking, right? So the trick with backtesting is like backtesting is always backwards looking, right? Because we have to pull the data, and in many cases, a lot of the data is hard to get, or it's at least really hard to clean. So there's a lot of services that provide data, and like we buy data in chunks and batches, but then you have to like clean the data and make sure that it's good. There's no missing strikes or missing expirations, and oddly enough, there's a lot of bad data out there that we have to clean. So we built the ability to backtest a bunch of different strategies, and it's fairly limited in the sense that you can't do minute data because a lot of it's not even available, or if it is, it's insanely expensive. So you can use backtesting as a means to kind of check to make sure you're in the right ballpark, right? You can test a bunch of option strategies, you can test all kinds of deltas and profit taking and expirations. One of the things that we built into our backtester was the ability to test multiple portfolio allocations. So say you wanted to do an iron condor strategy, well, you could test the same strategy with different capital allocation structures. So 1% per trade without going over 5% in total allocation, or 10% per trade, or 15% per trade, whatever it is. That's been insanely interesting to see how the exact same strategy with different allocations performs. And in many cases, you can see like where that optimization point is of allocating capital to a certain strategy. The ability then to take that back test and then create a bot is actually not that difficult. So you just take the back test that you have, you just spin up basically a brand new bot. We're going to try to make that connection a little bit more seamless as we go forward this year. But then you can build a bot based on that back test, or even tweak a bot based on that back test, and then start running that strategy automated in the future. And that's really where I think this whole industry should be going. I think most people are generally there. They're doing it manually. They run a strategy that they have in their mind, or that they've back tested, or that they use from a model. But it's the whole point click, manage the position, watch what's going on, that I think that everyone gets caught up in. And unfortunately, it means that we are less effective, more emotional. It means that we can't scale our strategies. Like even if you wanted to do a day trading strategy or a long-term strategy, how do you manage all these strategies and like juggling all these balls in the air?
Mm-hmm.
I think that this whole thing just opens up a brand new era for traders to do a lot more, trading, and do it more systematic versus more emotional.
I am all about the systematizing of trading. I think that is the wave of the future. Personally, I use a spreadsheet, and in the spreadsheet, it's got a lot of formulas, a lot of information going on in there. So I can drop in, a stock symbol. It's going to tell me, where the moving average line that I want to see is at. And then I can go and look on charts and make sure that it's hitting where it should be, kind of deal. So I'm really reliant on a lot of data. And I think that anybody who isn't relying on data is, if they haven't blown up yet, they should plan to, because I mean, discretionary, it's like, oh, I feel like buying this today. Well, what are you basing that on? And some of the biggest traders in history, like William O'Neill, people like Mark Minervini. I've talked to Mark before in the past, where I break down listening to them, learning from them. There's a lot to learn from them. But where they talk about, drawing lines on screens, drawing a cup with a handle, drawing a base, drawing, Mark Minervini has what he calls the volatility contraction pattern, where it literally is a squiggly line. And like, I'm glad that works for them, but my brain is not artistic enough to understand the shape of these bear flags and bull pennants and things like that. For me, I'm such an analyst. I've worked in corporate finance. Like, it's all about the numbers to me. If it's above a trend line, I can clearly see prices 100. The trend line is 98. As long as it's above the trend line, it's in a trend. That's easy enough to see. And if it breaks down that trend line, then the trend is broken and it's time to move on.
Right.
So, I mean, we're all at the end of the day trying to catch a trend one way or another. If we're going long or if we're going short, we're trying to catch into that trend. It's just the means of getting there varies a lot. And personally, for me, I've got to have numbers. I mean, I couldn't draw anything on a screen to save my life.
Me too. Yeah. I think it's interesting because there's so much discretion that goes into trading. I think that's been one of the harder things for people coming into the beta program and starting to trade is like, and I've told people from the beginning, this is going to be the case where you come in and like, you have to figure out what that process is for you. Right. And the beautiful thing about bots and the way that we built them is that process could be really varied, right? Like there's no one single path that a bot has to take. You can let the bot make decisions at every step and say, if this happens, then do this or this. If that happens or this happens, do this or this. But you do have to think out that process and know when you're going to exit and what criteria could be used for, re-entry or allocating more capital to it. And I think that side is tough because traders, to a certain degree, I think most traders like the discretionary, like the kind of gunslinging, like come into a day and just see what we can trade and hopefully something works, right? But we all know that a more systematic, mechanical, automated approach is naturally better. And it allows you to elevate yourself out of the mundane day-to-day activities of clicking and looking for every trade, checking volatility, checking open interest, whatever the things are that you do, so that you can elevate yourself from the repetitive tasks and actually focus on the strategic part, which I think is really, really exciting.
I advocate only trading 2 times in the day. I like to trade about an hour after the market opens, where like things have settled down. We're not like trying to catch all the day trader moves and things like that. And then the last 30 minutes to the hour of the trading day. Right. I find that for me, those are the most opportune times. And in fact, my strategy only involves closing in the last hour of the day, because I've seen it and you've seen it too, right? When a stock is drifting along and it like in the middle of the day gets all heated, but at the end of the day, it's still above your trend line. That's really where you want it to be. So for me, exiting signals are really just end of day signals. Would a bot be able to take that into consideration? Because I know like with orders, you can't do that, right? You can't put in a if it goes below 99.50, but only after 2:30 p.m. Central Time, do I want you to close, right? And like if you're putting an order in your broker, it's like if it goes below 99.50, even if it's 10 minutes after the market opens, and it just bounces after that point.
Sure. Yeah, that's super easy. So there's two things that we did. Yeah, those are super easy. And actually, like the fact that you said, like, if that's a difficult part, like wait till you see some of the things you can do in there. So there's 2 things that we did. One, you can add automations that repetitively go throughout the day. So right now they go every 15 minutes. We're going to start scaling them to the point in which they go every 5 or every 1 minute, but you can go every 15 minutes and just continuously look for things, right? So like for me, for example, with some of the trading that I do, I'm constantly letting those automations run, those scanners and monitors run, because as soon as the criteria is hit, I want to get in or out of a position, right? So if I'm looking for, let's say, an entry for a position, I've got minimum requirements for liquidity, for open interest, for volume, for bid-ask spread, and it's checking those every 15 minutes. Like whatever those opportunities are, it's rechecking. Like, do I have an opportunity? Do I have an opportunity? Do I have an opportunity? And only if it is, then it's entering. Same thing on exit. I wanted to check all the time. I wanted to check for profit taking, for stop loss levels, whatever I want to use for those particular strategies, and check it all the time. So that's continuous automations. And I think for the most part, people use those because that's what they want. They want that continuous check where they don't have to do it themselves. In your case, if you say, look, I know I want to do it on this set schedule, great. You can let your automations run on a set schedule. You can say every day at 3 o'clock, every day at 4 o'clock, every day at 2:30 and 4 o'clock, every other Thursday or every Wednesday or every Monday, Tuesday, Wednesday, because I hate Thursdays and Fridays, whatever schedule it is that you want, you can set the automations to run on that schedule. I think what people are finding though, is that when they have a set of criteria like what you have, using that set of criteria and then just letting the bot continuously monitor the market is sometimes better. So like a lot of things that we do in the market open is, we have bots that check for liquidity requirements and bid-ask spread requirements. So even though the bot is running early in the morning, it's got to meet some certain liquidity thresholds, which would generally allow for that, kind of market activity to present itself and for liquidity to flow in before a bot would ever make a trade, right? So super, super fun stuff. So
yeah, that's interesting. Cause like for me, I have a checklist, right? First is the market. Okay. Let me ask you this. So for me, like I start top down, right? Is the market bullish? Can you integrate that? Like, let's say I want to trade ExxonMobil, which is something I've been trading over the last week. Is the S&P 500, is that bullish? Can we determine that before we go to the next step?
Of course.
Is the oil energy sector, is that bullish? Is there a way to check that?
Whatever ticker you use for the energy sector, like if it's XLE,
so let's say XLE, because that's how I do it.
Yep, for sure.
Okay. And then you can say, So the market's bullish, XLE's bullish. Can you then screen? Can you say of like Chevron, ExxonMobil, Phillips 66, and Murphy Oil? Can you screen those, or does it have to say only ExxonMobil if it occurs in this thing?
Yep. So what you would do is you would build out an automation for each one of those tickers that you have. So
And it has like a sequence. You can do it like that.
To it. Yep. And then you tell the bot, you say to the bot, like, hey, I want you to check these 5 tickers, right? And you can just clone your automations really easy. So you build out whatever logic you want to use for every single one. Then you just create a clone of them, right? It's just one click to be like, clone it, re-enter a new ticker. So like now use this logic on this ticker and that ticker and that ticker. And then you put all of those into a bot. And for example, what a lot of people do is they say, look, I want to look at these 5 things, but I want to make one trade. And then you tell the bot, hey, bot, you scan these and make one trade. That's it. Like don't make 5, or you tell the bot, make 3 of 5 or all 5 if 5 are possible, or limit it and say, I want to make one trade per ticker. And you tell the bot, like limit it to one position per ticker that I have, or one type of position. So you can do all of that for sure.
Oh, that's cool. I really like that, because this is like, that's literally how my mind works, right? It's like, what do you call it? Like an ocean analogy, right? Is the tide up? Yes. Is there a wave? Yes. Is the wave having, I don't know enough about oceans. I live in Texas, so but that's the way I think about it.
Well, I do too. And like, so one of the templates I shared in the community last week was a template called trendy short put spread. And so the idea for this template actually came from our community for backtesting. So everybody can, so like you go in there and backtest, you backtest your strategies, but you can also see the top backtests that are run like across the entire community. So if somebody happened to run a good backtest and it came up with some good results, you can see what those results.
It's like a scoreboard.
Yeah, like a scoreboard, leaderboard.
Hey, that's cool.
Board. Yeah, so like you can kind of see like, oh, this is the top backtest that was run, or this is the top style of backtest for this particular strategy. So I found one in there that was a short put spread, and it was using weekly expirations, which I don't typically use. It's a
and I do, which is interesting. Okay, yeah.
Management. It's a lot of headache for me, right? Like I'm more of a monthly trader, but I like using weekly positions if I don't have to manage it and I can let a bot do it. So this short put spread. And the backtest looked pretty good, except for the fact that they didn't overlay a trend, like a 200-day moving average, or even something very simple like that.
Oh, okay.
So I thought about, okay, how can I combine this strategy, the repetitive entry of short put spreads on a weekly contract, with some sort of trend indicator, like a 200-day moving average. And so now what my bot does is it first checks to see if any of the tickers I'm trading are still in an uptrend, so over the 200-day moving average, as very simple, like double check verification, validation, if you want to call it, before I get into a position. I also check the VIX level, I check volatility and open interest, and only if all of those things are appropriate, bid-ask spread, etc., then I enter the position. And I do it every week, one position at a time for each ticker, so I don't overlap positions, and I just let it go. And then I can set up an automation to let it monitor that position automatically for me, so I can take profits, use a new thing that we have called Smart Stops, which is an industry first, and then also see if it's close to expiration or in the money. And so like if it's close to expiration or if it's in the money on expiration day, I can have the bot exit the position so I don't have to worry about assignment. Like all of those mundane things that we do naturally, that we rake our heads.
We have to learn to do as traders.
Just let it go. Yeah. And you just can let a bot do what it does best, which is just watch, monitor, and take action on things that you tell it to do. Does that make sense?
It makes a ton of sense to me. Yeah. Especially when you come from like an analytical perspective of, if this happens, then that, right? It's not ever well, maybe, right? I've learned a lot of expensive lessons with maybes, right? So whenever I get my signal, enter or exit, I am like, I'm Johnny on the spot. I'm making things happen right away. Right. So let me ask you this, right? It took me probably about 4 years of losing before I was like, maybe there's something I need to learn differently, right? And I started changing things up, and I started learning more from other sources. And there are some people out in the world that'll say that trends don't exist. You don't have to trade with trends. Option deltas are all you'll ever need. I'm not in that camp. I used to be, but the more that I've learned, the more market wizards that I've learned from, the more people I've had on the podcast, which I got to say, being able to chat with you, one of the pleasures of the podcast is being able to network with people that would have been unattainable, right? I've said this to several people on the show. It's so funny, the doors that a podcast would open, because it's like, hey, Kirk, can I come, shoot the shit with you for half an hour today? I'd be like, no, I am a busy man. I do not have time to be talking nonsense with you. So the podcast has been wonderful. And on that topic, being able to hear guests in different perspectives has really opened my mind. So then when I started looking at trends and finding ways to back test things, not just saying 25 delta, 75% of the time, you're good to go, right?
Yep.
That was a real monumental change for me. How does that and especially because you have the bots and everything that are working with trend lines, things like that. How does that come into your trading? I'm just curious, because you just mentioned a minute ago with the 200-day, just adding that on is something simple.
Yeah, I think, it's interesting. Like, I've gravitated more towards the idea. I mean, like, there's two things we know. Like, one, that trend is a thing. Like, it's an actual tool that you can use. And in many cases, trend, when you look at it from a stock perspective, right? And of course, like, bots can trade stocks and options, either one, interchangeably, together, same time, different if you want to. If you were trading just stocks, trend usually doesn't help for outperformance outright, in the sense that it's going to create all this like additional upside. What I've seen research on, and usually what trend does, is it helps reduce some of the sting of downside, which then as a result creates better performance, right? Because when the market has a drawdown and you don't participate in that full drawdown, and then you jump back in, now you're ahead of where you should have been, right? So it helps more on the drawdown side, or kind of avoiding really bad situations. I think that using some sort of trend in some of the things that you're doing, especially if you're doing more mechanical, systematic strategies, and you could use trend, you could use VIX levels if you want to, like some type of macro indicator to tell you where you are in the cycle, I think is incredibly important. And I've always told people, like what they should do is just use it as a double check and reference for positions. What I would do naturally before this, when I was doing everything manually, is I would do this in my mind. Like, I knew if the market was above its 200-day moving average, right? I didn't have to have a bot check for me. But now that I'm going to offload all of that to the bot, I want the bot to check that specifically. And so I think that people should use whatever indicators they want for trend or momentum or range in a cycle. You can use probability ranges, you can use support and resistance levels, and you can tell the bots, like, this is support, this is resistance, here are the levels I want you to check. Like, just tell the bot what to do so that you can start looking at and analyzing other strategies you can add, right?
Kirk, I've set a goal for myself this year. It's to read 50 nonfiction books and 50 fiction books, but that also includes audiobooks. I'm a huge audiobook file, if that's a thing. But right now I'm in like my stack of trading books, rereading all those. And one thing that keeps coming up over and over is the debate on fundamentals. I think I was in my MBA program. So when I was in college, I was like, what's the easiest degree to get? And my mom, who's an accountant, she was like, business. And I was like, deal. Because then there's like subgroups of business, right? Which is the subgroup of business that requires the least amount of hours? And it was management. And I was like, perfect. That's where I'm going to be. So I'm taking my undergrad classes and I'm doing the business thing. And every time I have a finance class, I'm like enamored with it. Like, this is where I want to be, kind of thing. Like, I didn't care about accounting. Who cares about debits and credits? But like the idea of trading and forecasting and making money, that's where I was at. In fact, my father-in-law, before he passed away, he just, side note, he told me, he was like, Chris, that was really smart of you to go into finance, because the closer you get to the money, the more money you make. I was like, I guess those are some pretty wise words, but either way. So when I was in my MBA, we were put in this class where we managed a fund, and every week somebody brought their trade idea to the table with X amount of fundamental reasons, earnings per shares and earnings gross and 10Ks and all this like fundamental stuff. But as an actual trader, I've literally never, not once ever, opened up any kind of fundamental analysis to take a look at that. What's your perspective on that?
I mean, I think where I stand on that, in the sense that just from like history, and I know we go back and forth on this.
Well, it's fun to have the conversation.
Oh, I know. No, yeah. I love it, because here's the thing, right? So, I mean, there's a bunch of things that are wrapped up in this, right? One is that all the fundamentals in the world mean nothing inside of maybe 2 years or even 5 years in some cases, right? You could have fundamentally the best company, the best industry, the best sector, and it just takes time for those fundamentals to play out and then be priced in, right?
Mhm.
Because what people are not doing is they're not pricing in what has happened right now. It's their expectation of what's going to happen moving forward. And so the difference, and this is the interesting correlation back to options trading in a second, the difference between somebody's expectation and then the reality of what happens is lots of volatility in the process and a big, waiting period and patience and understanding and, all the things that we need to learn as traders. When it comes to fundamental analysis, yes, I think that some level of fundamental analysis is important if your time horizon for a particular entry is long enough.
Mhm.
However, I don't think that if you have all the best fundamental analysis completed in the world and all of the growth rates and all the expected growth rates and all the forward-looking forecast stuff is going to help you if something switches like that, right? The pandemic came March of last year. All the fundamental analysis for 5 years, 10 years out went out the window, right? Like things happen much faster and could happen much faster on a shorter time period. So as a trader, me personally, all that fundamental analysis is great. I should definitely keep my head above water and I should know generally where we're at in long-term trends and cycles and CAPE ratios and whatever. But like that stuff is meaningless to my day-to-day trading activities because what's more important there is, am I balanced? Do I have the right risk, risk profile on for my positions? Am I over allocated, under allocated? Am I trading the right diversity of tickers? Like that's going to protect me way more than knowing if the PE ratio, 10 years out for this particular stock is above average or below average, whatever it is.
Yeah, that makes sense. I mean, what I couldn't tell you who it was, but I remember listening to one of the Market Wizards books by Jack Schwager. And one of them on there was like, I am purely fundamental. I do no technicals, whatever. And he's like, so if this, let's call it a stock. I think it was a commodity, but let's say oil's going down. You're just going to buy it because you think it's bullish. And he's like, yes. And I'm like, that is such a recipe for failure. I've been there. Kirk, I blew up my account twice. The second time I blew it up was because I wanted to say the gold was going up when gold was like falling to zero. And like, yeah, I couldn't imagine taking the fundamental only perspective. Because I mean, I suppose if you're Warren Buffett with 80 years of lead time on taking your profits, then sure, buy whatever. But I don't have that luxury. I'm not going to claim to have that luxury. And I would like to make money sooner than later. So
yeah, I think that, the fundamental approach for sure works. Like value investing works on a long enough time period, right? Like right now, the last, call it 10, 20 years, like value has sucked and has underperformed growth and everything else, right? And naturally it has, but like it'll shift, could shift back and may shift back in the future. I'm sure it will at some point, but those time horizons that you have to wait for those things to play out, like you said, sometimes are just too long. Like my approach personally is to look at, and I think it's very relative to fundamental analysis, just patience and whatever, but like looking at a systematic trading strategy across 10 years, 15 years, 20 years, and saying, okay, does this strategy generally play out over 15, 20 years? Not that it's going to play out the exact same way, but like, are the conditions, the requirements, the markets still generally the same such that this strategy should play out moving forward? And if it does, I don't want to go through the day-to-day operations of having to reconfirm that to myself every time I make a trade. I just want a bot to do that for me so I can look for other strategies that I can start trading as well.
So what do you think about dividends? Are you a dividend stock guy?
No,
I'm not either. A lot of people, especially on the YouTubes, really like to push the idea of, hey, buy dividend stocks. That's where everything's at, bro. But I think that goes.
Yeah. I mean, dividend, I've seen a lot of research and I would agree that like generally high dividend paying companies underperform companies that don't pay dividends and are just high growth. And you can get more value accretively through the share price rising and then just selling off portions of your shares if you want to.
Yeah, for sure. When people ask me where to start, going back to dividends here, one of my go-tos for them is I like to tell them, buy a dividend stock that you can sell calls on. And as the stock appreciates, make sure it's like obviously not like a crappy stock that has no value. But as the stock appreciates, this is what I call the triple stock profit system. You've got the dividends that you can earn. you've got the calls that you can sell, and you've got the price movement hopefully going in your favor. So that's where I tell people where to start, right? Just plain and simple. You've never traded before. My friend Richard, he was looking to get into trading because, like trading's become like in favor right now, which is pretty cool. I'm happy about that.
Yep.
I was talking to Tom Sosnoff a couple of weeks ago, and he and I were talking about how wonderful it is actually that GameStop. I was about to say GME. That's not it. GME, GameStop, happened because it brought millions of people into our world, right? That's millions more dollars in liquidity, billions of more dollars of liquidity, more people who are interested in learning about bots, learning about how to trade, listening to podcasts. Yeah, should be, right?
Mm-hmm. Yep.
So that's where I tell people where to start is a very simple, you understand the concept of buying a stock. We're never going to talk about shorting stocks. You understand the concept of buying a stock. You understand the concept of a dividend. Let's add one little tiny layer of selling a call. And then you know what? You have entered into the world of real stock and options trading. And this is what people have done for decades at this point. And it's a way to get into the market, get your feet wet, and potentially make 3 different avenues of income from that. Well, maybe not income, but of appreciation from that. What's your thought there for a beginner? Where would you say it to start?
100%. We wrote a book called Mastering the Covered Call, which talks about the 1 hour. It's the 1 hour strategy, and 1 hour is probably being overly zealous in the fact that it's probably you have to walk to the library, you probably using dial-up, right? It takes probably before bots took you 2 minutes to do a covered call. Now you don't even have to do it. You could automate that whole process. But the idea around reducing the cost basis in stock ownership by selling a call option above where the stock is trading or some level above where the stock is trading as a means to increase your probability of success, reduce volatility, is genius. It's exactly what people should be doing. I've always thought that the reason that people don't do it is A, they don't understand it, which is hurdle number 1, just having to understand what to do. But then B is the actual process of doing it is cumbersome to a certain degree if you don't understand how to do it. You got to log into your broker, choose the expiration. What do you do with it if the stock continues to go up and you get a sign? Now you don't have the shares anymore. Can you avoid that? Can you try to get out of that? There's a lot of complexities that go on the back end of that. And so most people just go, well, okay, forget it. I won't do it, right? When they know that something that takes 2 minutes of your time or 0 minutes now of your time can help you so much more in the future. I would even say that trend is a very good example. It's if people were using a trend strategy, even just a 200-day moving average, for all intents and purposes, they would have completely missed the March drawdown, right? But they weren't, right? And then they just throw up their hands and go, oh, the market crashed. Well, you could have had something that would have prevented that. You could have watched it yourself or had a bot do it and, manage your whole portfolio that way. So I think this whole movement that people are on right now, and we've seen for the last, call it 5 or 10 years, this wanting to understand more about the markets, wanting to understand more about finance, stocks, and options, and how they can use strategies to protect themselves, to increase their probability of success, hopefully increase the return that they have. I think it's all great. And I think as long as it's pushed in the direction of education and learning and trying to understand things versus the gamification of it, the better.
I don't know. I like the gamification of it. I
0.5% of your account, but me, I don't do that.
Oh no, I don't mean gambling. I don't play that. Actually, I did an interview with Cheddar TV, and it was right when the GameStop thing was happening. And I actually had somebody ask me one day, they were like, Chris, why do you trade? And in a philosophical way. And I had to sit and think for a minute. And I was like, it's not about the money to me. It's about the game. I enjoy playing the game.
Yes, that's the gamification for 100%. I totally agree. I think everybody's on the same page. We don't do this because we could obviously be doing other things. It is the game for me, for sure. Yep.
Yeah. And I think that's where the most successful people in trading come, because they look at it like a puzzle or a chess game or something like that, right? It's something to learn, to figure out and adjust in real time. It's not, this is, I'm going to buy Apple stock and it will only go up because it's Apple. I'm going to buy Tesla stock. It will only go up because it's Tesla. And, when you hear people who have been holding on to something like Tesla, I heard about somebody who bought it, I don't know, I guess must have been 8 years ago or something, and they're, you know, a 13 millionaire from $1,000. That doesn't happen all that often, Kirk. And you see so many things like the Motley Fool recommends this stock that, you know, if it were Amazon, it'd be your $1,000 would be worth $2.9 million. It doesn't work that way. I mean, you're never going to sit and hold through the 50% drawdowns that are going to happen over time.
6 times.
Oh, at least. Yeah.
Right. Yeah. I mean, like, I think that's always fascinating because, I mean, look, hindsight is always 2020, right? Like, could we all have made $1 million, like buying Amazon and Tesla and all these companies, or, you know, even like now, like Bitcoin, when it first came out, like, of course we could have done it. Right. But we would have been absolute insane lunatics for watching our capital go from, you know, up whatever it was to 80% drawdowns multiple times. People cannot hold through those situations. Mm-hmm. The rare instances where somebody does, I think, was more luck than naturally skill.
So what is your opinion? Because, you know, talking about the asymmetry of potentially a rewarding scenario looks like a long call position, right? You're going to limit your losses. You're going to let your profits run kind of deal, which is the opposite of selling puts. Right. It's the opposite of covered calls. Exactly. What's your opinion on buying options? And I'll give you mine after yours.
Yeah. I mean, look, statistically, the numbers are not in your favor in the sense that you have to get a bunch of things right in order for it to work out. If you get those things right, and if you have enough capital to last through the long periods where you're wrong, then of course there are strategies that work out that do really, really well. I think that there are people who have skills. Let's call them like trading skills, right? The Peter
with the Z, skills with a Z.
Right. Yeah. Skills.
That's when it's cool. Yeah.
It is. So like there are people who have trading skills. Like I do not have like the graphical charting, chart patterns. Like I don't have that skill. Like I recognize them, but like to draw the exact perfect line and be very subjective about it, I don't have that skill. But there are people who have those skills. And I think it does work better for them. For the person who's like me, who doesn't have those skills and needs to be more systematic and, you know, like disciplined and data driven, I think that buying options or going long securities is tough as an outright move. You got to get the move right and the magnitude of the move, which is incredibly hard. And then you got to get the timing right. So like if it happens too fast, too slow, it doesn't happen enough or large enough, or the move is underpriced compared to what people were expecting. Like the stock made a 10% move, but people thought it was going to make a 15% move and you still lost. So you got the move right. You got a big move in the right direction, maybe in the right time period, but it just wasn't the magnitude that you needed. So do I think that there are strategies that do well in that? Am I looking forward to seeing what people share in the community and strategies that people use and I can start to use if there are better people who've set up strategies than like what I trade? Like, yeah, I'm definitely looking forward to it. But to me, it probably won't be like a staple thing that I do.
Yeah, interesting. So my perspective on buying options has changed a lot. Obviously, the buying out of the money calls, out of the money puts, I mean, you're just basically just throwing away money. When the probability is 85% against you, you know, that just doesn't make sense. And then when you hear the people, this is how I blew up my account the first time, not the second time, but the first time was I bought boatloads of out of the money calls thinking stocks only go up. This is going to make so much money. And, you know, that's what a lot of how do you call it? Like the internet new trading gurus, right? The TikTok investors and things like that, where, man, I just kind of went down a rabbit hole with that yesterday, where it's like, when a stock's going up, I buy it, or I'll buy a boatload of out of the money calls and then I'll make more money. And it's awesome.
That easy. Yeah.
It's just that easy. And when it goes down, I get out. I don't know why people make it so hard.
Yeah.
But for me, like if I am looking to go long a stock right now, I'm like, how can I get the most leverage for it? And like, let's say we're buying it on margin, right? Let's say I took $1,000 and I bought 10 shares of Apple at $100 each. And basically I put $500 in margin to do that. I like that. That's good. But let's say we take that same approach and we buy a deep in the money call, 80-90 delta, the stock replacement strategy, as people would call it. And then you're getting, instead of $500, it might cost you $250. And maybe your extrinsic value, maybe that's only like 25 cents, 30 cents, something like that. That's where my head's been at lately. And I've been seeing a lot of really promising results from that. I'm kind of interested to see how that would play out in like a back tested scenario in a because where I came from with this is I was running back tests, and I would see like the stock would perform really well in this particular back test, and I was like, all right, now let's apply leverage to that and see how it does. Lo and behold, it works, and I'm like, I like this idea. Yeah. So that would be something I would be curious to see from other people on that.
Yeah,
that
I mean,
leaderboard.
So I like the concept of doing that. So when I was talking about buying options, it was more
out of the monies, of course. Yeah.
Out of the monies, at the monies, close to the monies. The idea of using options as a stock replacement, right, for leverage, and certainly for reduction in risk, right? Because the stock just randomly overnight blows up, which is bound to happen, and in many cases happens multiple times for a stock, then you're protected to the downside. And what you give up is you give up a little bit of that premium, right? That you're going to, slowly pay out in extrinsic value that wilts away. But I think that idea and that concept is really, really interesting. You can backtest a lot of those inside the platform anyway. You can trade those if you want to. But I think that concept is cool. And I think, again, the more people that look at, okay, what is the alternative to stocks, right? 99% of the market of investors only has one opinion. And that is, I buy stocks when they're low, and I hopefully sell them when they're high.
Yeah.
That is so narrowly focused for what you can possibly do. It's almost mind-blowing to me at this point. But I think that whole wave of people who are trying to look for alternative solutions, like deep in the money options as a stock replacement or options or whatever, is fascinating. I think the whole movement is fascinating.
You talk about the buy low, sell high. It's funny. I was listening to a podcast with Michael Covell and Dr. Alexander Elder. Michael Covell wrote Trend Following. You got it back there?
Yep.
Man, that's one of my favorite trading books ever. It's a textbook.
It's a massive one.
But it reads so easy.
It's a massive book. Yeah.
Yeah. Actually, I just found out I had the 2004 version. And I didn't even know that he had written like a 5th iteration since then. And so it's supposed to arrive today, the new version. It's like supposed to be twice as thick. So that's probably the one you were pointing at. So I'm interested to get back into that again. But I don't remember where I was going with that. Either way.
Sorry.
But the idea of applying the leverage when you've got back tested strategies in your favor, I think is very powerful, right? You have proven mathematically that your strategy is set up to work. And if you can apply more leverage to it, by all means, I think that's a very opportune place to be. But with the knowledge of, if it doesn't work, you must cut your losses very quickly, because that leverage works both directions, Kirk. I'm sure you've heard that.
Yes. Been on both ends of leverage.
Yes,
for sure. Yeah, I think it's more, I think leverage is, or the way that I think about it is, yes, there's leverage, right? Like, and because I just trade options, like I'm aware of the leverage. I think what it comes down to, and what I've learned in just going through tons of data and like seeing all the back tests that we run and the back tests that other people run, is it does come down to like the sequencing risk that I talk about all the time, which is that even the best strategy, if it has the possibility to go through, say, 100 losing trades in a row or 50 losing trades in a row, I just don't think that people take that into account, right? Like, that's why I think back testing is so important. Even if it's not going to be a perfect representation of the future, which it won't be, just getting a frame of reference to understand like how long the night is, are your deep drawdowns like 400 days? Because when people look at a strategy and they're like, this strategy, these are the ones I like on the internet too. So like when I go down my rabbit holes, like seeing what other people do, you'll see an ad that says this strategy made 3,000%, right? But what they don't tell you is that for 4 years you had a 90% drawdown, right? Like nobody in their right mind would go through that. So I think the sequencing risk of strategies and trying to understand that better, in addition to the leverage, I think makes the whole concept around trading and strategies and all that just a lot more interesting, and definitely where people should focus their time.
What do you say to people who don't believe it, right? They're of the mindset, there's a couple different mindset, I guess you could say, but like they don't have the growth mindset. They don't have the opportunistic mindset. Let's say, anybody who teaches trading, anybody who does, trading podcasts or whatever, they're all a scam. There's a huge amount of people about that. There's entire YouTube channels devoted to, exposing fraudsters. And if they ever wanted to come after me, I'll show them whatever. I mean, I got nothing to hide. I mean, I don't make 500 podcast episodes and have skeletons in my closet. At some point, they would have fallen out a couple times.
Right.
But what do you think about that? The people who just they don't believe that trading is possible. What do you say to those people?
I would say look at the data. Like, so to take an objective look at data, right? There's a lot of resources that you can look at for data, but do your own analysis, right? That's like somebody originally saying like, well, the world is not round. Like, well, did you travel across the ocean, right? Like, did you get back to the other side? Because you're just making a guess and an assumption at what may or may not happen in the future, right? But I think that if you look at the data and then verify from like 5 or 6 different sources, take like a covered call strategy or an out of the money option strategy or option selling strategy, and you see that like 4 or 5 different sources have about the same data, about the same, results or performance, or then you obviously have to believe through the data that it's at least possible to do, right? The challenge is that what they do is they look at a 10-year period and then they say, wait. For the last 2 months, this has done really bad. Therefore, it sucks, right? So like this strategy didn't catch this one little weird anomaly in the market. Therefore, write off the whole thing, right?
Mm-hmm.
And I think that's what most people do. So that's okay. Like I'm super skeptical of a lot of option buying strategies, but that doesn't mean that I'm not going to keep looking at them, trying to find something that works because I want it to work. Like I want one that I can use, that I can trade, that I can have a bot set up and like totally take care of.
Well, I was about to say, bringing it back around to bots, if you find a back-tested strategy that like in your data works, and then you apply a bot to it, in theory, it should replicate those results because you remove the human element, which
you should do better. In many cases, you should do better because you have the ability to look with a little bit of hindsight, right? Like a little bit of hindsight, you can look at it and say, okay, how did this strategy perform in market drawdowns? Like you can look on the graph and be like, wow, it had 2 massive drawdowns. So maybe I overlay a trend indicator. Maybe that keeps me out of those massive drawdowns, right? Like you have a little bit of that hindsight, like benefit, I guess, to make tweaks and adjustments to it. We still don't know what's going to happen in the future, of course, but yeah, like you should be in the same ballpark moving forward, especially if you don't have to deal with your own emotions. Yeah.
Yeah. Cause at the end of the day, I think that anybody, truly, I think that anybody can be successful in trading if they understand the risk and return that they're taking.
Yep.
They're able to let, old cliche, let your winners run, but cut your losses really short, right? I mean, don't let the losses work against you. And mathematically, over time, you should make more money. But I mean, it's not just, throwing darts, right? You actually need to be smart. You need to have a system that's been mathematically proven to work. And if you can remove the emotionality, follow the plan, which is really where everyone goes wrong, is they don't follow their own plans. That's why when I teach people, Kirk, I call it their unbreakable trading plan. When you're making your trading plan, Kirk, this is unbreakable. You're not allowed, like this is a marriage. You have married this trading plan. Don't think under any circumstance that you need to say, oh, I don't know, this is looking good or bad. I'm gonna move against my trading plan, because that then invalidates the system that you just worked on, improved, because you've now thrown your own monkey wrench into it. So I think that's where the one breakdown is, and why people are skeptical is because they get sold the idea of an 86% win rate, but then they don't understand the emotionality in trading. And when I tell people to trade or talk to people about trading, I say the first thing I tell them is turn off your P&L. Do not look at the dollars, because that messes with your mind more than anything. Percentage wise, like you understand you're up, you understand you're down, whatever. But when you see, I just lost my rent today, or I just made as much as a used Honda Civic today, that messes with your head.
Of course.
But whenever you follow your plan and understand it, and you remove the P&L and then look at it afterward to say, okay, this did this thing, and then reviewing your trades. I'm a huge believer in, if your trade did not work, why did it not work? And also, one thing I started doing recently was writing down why I exited trades. and then reviewing those, like, oh, I exited because it broke this trend line, or I exited because it let's say it had like a 85 RSI. It just looked extremely overbought mathematically. Like, this doesn't make sense to me. Things like that. So I think having those historical data points and giving yourself a class of one, back in reviewing your charts, reviewing your stocks, seeing what you did, and learning, right? Oh, here's where I was going. Okay. I remember now. So it's easy to see the buy low, sell high in the middle of the chart, right? When you're looking at your screen, you're looking right in the middle. It's easy to see the buy low, sell high points. But it's when you're at the far right, which is the today point, that you don't know if it is going to be the buy low or sell high point. But it's only after that's moved to the middle when you can look back at your notes, which is what I was just talking about, and objectively say, did I do the right thing here? What can I learn from that? I think is invaluable. I think that one step, instead of saying, trading doesn't work, but actually saying, what did I do wrong? Where could I improve? Is the difference in somebody who wants to trade and the difference in a real trader.
So there was a great story. I may have told this on here, but I think about it all the time. But it was Tommy Maddox, the pitcher for the Oakland A's, or not for Oakland A's, for the Atlanta Braves. Do you remember that pitcher?
No. I don't watch sports, man. The only sports I watch are stocks moving up and down. I don't.
Either Maddox or not like this. It's either Maddox or Tom Glavine. It was John Maddox or Tom Glavine. Anyways, the interviewer interviewed them after a game, right? And basically said like, "Hey, you just had this amazing game. Like, how do you feel, right? Pitcher, right?" And the answer that he gave to the interviewer was basically like 72 of 78. And she was like, "What are you talking about?" And he's like, "Well, 72 times out of 78 times, I threw the ball exactly where I wanted to throw it, and it came off my fingers exactly how I imagined and wanted it to come off my fingers," which is the perfect analogy for trading and investing, because everything after the ball gets released is out of his control, right? So like as traders, as investors, the only thing we can do is focus on process and not outcome. Like outcome will take care of itself. But like if we have the process in place of making sure we're checking risk and position sizing and volatility or open interest, whatever it is for you, and then you can make your notes, right? And like document your process. Like, did I follow my process or did I break my process, right? And it's very easy right now. And I would say that this is why everyone will start doing automated trading. It's the same reason why everyone does auto bill pay right now, right? Because it's so much easier to let that process be managed by something else so that you can focus on what that process is or what the strategy is. But when you get into the deep weeds of executing your own plan and your own trading strategy, you are naturally going to like shoot yourself in the foot with your own emotions, right? Yeah. Because you're going to say, this time is different, or this is different, or that's different, or maybe I should change this, right? And now you're messing with the process, trying to manipulate the outcome for that scenario, right? And I think that's just really, really deadly. So I agree.
Kirk, we've covered a lot of topics, and this is why I love the opportunity to talk with other traders, because trading can be really lonely, right? Just sitting here with my two monitors and a bookshelf with a green sheet behind me, and that's about it. But being able to chat with other people, get other people's opinions, and hear that honestly, it's like Tony Robbins talks about, right? It's not that success is born with people, but you have to model other people and see where their success leaves clues. And that really will propel people forward. And that's why I'm so grateful that I have an audience, and you as well, because Kirk also has a podcast, which we hadn't talked about yet. Sorry about that, Kirk. But Kirk, good. I mean, with Option Alpha, you've been doing this for like a decade now, at least, right? Yeah. So make sure you go and check out the Option Alpha podcast, hosted by our friend Kirk. But Kirk, where can people learn more about the bots and all about what you're up to?
Yeah, so you can go to beta.optionalpha.com right now, which is where the bots are. Pretty soon, probably at the end of this month, we'll have everything recollapsed into the main site, but everything on the new bots in the beta program is at beta.optionalpha. And I would encourage you to, take a look and see what we're doing. I think we're doing some pretty awesome stuff. The tech is literally industry first across the board. We've got patent pending technology on the automation software, which is awesome and was a huge, milestone for us to cross. So we're really, really excited about it. Yeah.
What platforms does this work with?
Yeah. So right now we connect to TD Ameritrade. So that's our main brokerage connection. We signed agreements to connect to TradeStation and Tradier, and we're hopefully going to get some other brokers signed up pretty soon.
Cool. Yeah, I know. When I was talking to Sosnoff a couple of weeks ago, he said that they're finally going to release the API for Tastyworks, which that's where I've been trading. Yeah. He said it was a big deal. A lot of people have been asking for it, and that they're in the process of making the API available. So I know that's going to open up a lot of options traders too.
Yeah, I've talked to Christy and their team, and we've sent documents back and forth, and we just continue to send documents back and forth between legal teams. So I hope, it's not official yet, I hope, fingers crossed, that we'll have an announcement on, connecting to Tastyworks. I think it's gonna be huge. I mean, like they very much, talk the same thing that we do. I think users are very interested in, very systematic trading approaches, and I think it's a great complement to what they do.
Yeah, absolutely. And Tastyworks is the platform that I use and that I recommend all the time. And the people there have been amazing. I mean, like Dr. Jim Schultz, he was actually my trainer for personal trainer for 6 months, and he and I text pretty often. Yeah, I love the people that work there. They're really good people, and the fact that they are so open is amazing. I feel I'm way more closed off than they are, because honestly, there's a lot of times where I'm just leave me alone. I just want to be in my little bubble. But I am so grateful that we are able to make the impact that we are, and have the ability to network and help other people in this way, and to share our messages out there, and to share about these bots over at beta.optionalpha.com. Make sure I say that correctly.
Yeah.
Well, Kirk, this has been a real pleasure. I'm very excited. I'm gonna go check out the beta program right now, and hopefully it's an easy learning curve. You were making it sound pretty easy, so I hope it is. And I encourage all the viewers and listeners to do the same over at beta.optionalpha.com.
Sounds good, man. I appreciate being here. Thank you so much.
Yeah, thank you for your time, Kirk. It really is wonderful. And thank you guys for tuning into today's How to Trade Stocks and Options podcast. Make sure you like, subscribe, and enable notifications. That way you never miss any of the tools, tips, and tricks we upload every single week to help you trade faster and trade smarter. I'll see you on the next episode. Okay, so what'd you think? That was pretty incredible, right? Now, if you liked that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.